Hi everyone, welcome back to this week's Technical Insights. The Straits Times Index ended Friday, September 22nd, slightly higher after cutting major early losses. The SIAS Index rose just 0.06% or 2 points to close at 3,204 points, but was 2.3% lower for the whole week. Across the broader Singapore market, gainers beat loser 302 to 241 with 1.3 billion securities worth 801 million changing hands. Regional markets turned in a mixed performance, China and Hong Kong index clocking gains and faring better than Japan and Taiwan. Shanghai Composite Index was up 1.55%, Hong Kong Index gained 2.28%, while the Japan Nikkei 225 lost 0.52% and the Taiwan 50 FTSE Index dropped 0.2%. For the week, the Dow Jones Index was down 1.89% to close at 33,963 points, breaking the 34,000 handle. Both the S&P 500 and the Nasdaq Composite Index suffered a third straight week of losses and the worst weekly performance since March of this year. The S&P 500 lost 2.93% to close at 4,320 points. The Nasdaq Composite Index fell 3.62% to close at 13,211 points. The broad-based CSI 300 index was up 0.81% on better-than-expected economic data and ended the week at 3,738 points. The Hang Seng Index slipped 0.69% to close at 18,057 points as foreign investors bought 7.5 billion yuan worth of onshore listed stocks on Friday, the most in 7 weeks according to the Stock Connect data. Our STI Index sank 2.31% to close at 3,204 points, concluding what has been a tough week for the global markets on hawkish Fed commentaries. All three local banks on our STI Index were also down last week. DBS Group lost 2.89% to close at $33.25. UOB sank 3.36% to close at $28.22. OCBC slipped 2.25% to close at $12.61. SGX shares were also down 1.91% for the week to close at $9.74. One of the biggest winners we have last week on the Singapore market was Creative Technology. The company's shares were up over 20% for the past week after it announced a tie-up with Chinese electronics company Skyworth. The partnership will allow Creative Technology's Super X5 holographic audio technology to be used with compatible television sets by Skyworth, who is one of the largest Chinese electronics company. One of the biggest losers last week was Mapletree Pan Asia Commercial Trust, whose share price dropped more than 5%. This is on the back of the trust redeeming 326 million Hong Kong dollars worth of 3% fixed-rate bonds on maturity on 20th September. The bonds were issued on the same date in 2016 under the trust's 1.5 billion euro medium-term securities program. So for this week's technical analysis, let's look at both Creative Technology and Mapletree Pan Asia Commercial Trust. First, let's look at Creative Technology. Creative Technology Limited engages in the design, manufacture, and distribution of digitized sound and video boards, computers, and related multimedia products. The share price jumped over 21% on Friday, but closed slightly below the 20% mark at $1.40. The year-to-date high that we spotted was at the beginning of the year at the $2 level. On the other hand, the year-to-date low was on 14th of August at around the $1.10 level. The primary trend that we observed since the beginning of the year was a downtrend, and prices has been consolidating between the $1.30 level and the $1.10 level since the May of this year. The recent high that we saw was on 16th of August at the level of $1.28, and the recent low was at the $1.10 year-to-date low on 14th of August. The jump that we saw on Friday was capped at the 200 days moving average, which is the red line at $1.39. The first support for the share could be at the recent high of the $1.28, and the next support could come in around the 50 days moving average, which is the yellow line at $1.19. The MACD saw a big jump reflecting the momentum of the bounce on Friday. But before that, we saw that the MACD histogram was actually declining. So while it does have a positive reading on the MACD indicator, the positive momentum is actually weakening in the earlier part of the week. The RSI reading on Friday shot up to 76 from the previous day reading of 49, which was in line with the RSI 14 days moving average. This suggests that the stock is now in overbought region and a pullback is likely to happen. So I would like to caution investors against chasing this creative rally until at least it returns to the 50 days moving average at $1.90 or even the year-to-date low at $1.10. Next, let's look at Mapletree Pan Asia Commercial Trust. The share price dropped by about 4.5% for the whole week and closed at $1.45. The year-to-date high was spotted on the 4th of April at $1.80. A new year-to-date low was made last Friday at $1.44, and that was lower than the low that we observed in November last year at $1.45. The primary trend that we observed since the April year-to-date high was a downtrend with the formation of a series of lower highs as well as a series of lower lows. The recent high that we saw on the 19th of September was at $1.54, and the same high was observed on 15th September as well. So this could be a double top formation. The price now is trending on the lower bound of the Bollinger Band at $1.45, and the Bollinger Band basis on the 20 days moving average is around the $1.50 level, and this could be the first resistance if the downtrend persists. Else the next resistance would be around the 50 days moving average at $1.56. The MACD is seen converging towards the signal line, and hence this is not a good sign. If the MACD crossed below the signal line, the downtrend momentum that we observed so far may accelerate towards the downside. The RSI reading that we have on Friday was at 33, down from the 15th September reading of 51. This signals that the downtrend is not yet completed, as we have not breached the 30-point oversold level on the RSI. Hence, I suggest investors to be more patient and wait for the trigger of the oversold signal from the RSI before considering to enter back into Mapletree Pan Asia Commercial Trust again. And with that, I've come to the end of this week's video. As usual, if you find this week's video useful, do give us a like or a share and consider hitting that subscribe button to stay up to date to our latest update. And I'll see you again next week in the next Technical Insights.